I believe that there are three foundations of wealth that everybody should invest in. That's intellectual property, real estate, and the stock market. The stock market is the only one of the three that allow you to make money without having to sell anything to anybody. You don't have to sell somebody a property. You don't have to sell them on the idea of leasing or renting out your property. You don't have to sell them a digital or physical product. You can simply learn a skill, whether that skill is long-term investing for growth, whether that's dividend investing, or if you're somebody out there that's looking for quicker cash flow, even day trading. Now, day trading is not something that you learn overnight. It's not a get-rich-quick scheme or scam. However, I have mentors that have made millions of dollars and continue to make millions of dollars consistently from trading. Now, I want to introduce you all to one of my mentors as well as his business partner that has created a software designed to help you shorten your learning curve as it pertains to day trading. Now, what I want you all to do is listen carefully. If you have questions, ask questions down in the description below. And I know that not everything you're going to hear in this next segment might make sense to you instantaneously. However, I do want you all to understand in a nutshell, here's what it is, and then I'm going to give you guys a detailed breakdown with my mentor and business partner right here. But this tool allows you to understand, based off of whatever stock you're looking at, when you should get in and when you should get out. It doesn't get in and get out for you because it lets you control your money, but it does tell you, hey, look, based off of data, and they're going to explain that it's not guessing, it's not whatever, but based off of data, here's a good entry point, here's a good exit point, and then it's up to you to decide if you want to get in or get out, or even trade at all that day. Without further ado, I would like to introduce you to CFSM. Hey there, before we get into today's life-changing video, here's just a quick heads up before we dive in. Everything shared in this video is for educational and informative purposes only. I'm not a licensed financial advisor, CPA, attorney, or investment professional. The ideas, opinions, and examples shared are based on personal experience, public data, and general knowledge intended to help you learn and make more informed decisions. Nothing in this video should be taken as personal, financial, legal, or investment advice. Always do your own due diligence, aka research, and when in doubt, speak with a certified professional who understands your unique situation. Also, please know that results vary. Just because something worked for me or someone else doesn't guarantee the same outcome for you. Success takes effort, consistency, and your own decision making. From time to time, we may share tools, services, or offers, and some may include affiliate links or partnerships where we earn a commission at no extra cost to you. We only share resources we believe provide value. The goal is to empower you with knowledge, not pressure you into anything. You're in control. Thanks for watching and investing time in your own financial education. Let's grow smarter together. I love you, cousin JT. Let's get into it. Hello, everybody. I'm here today with two very special guests that are going to show us a way that you can start having more consistent wins as a trader. So you guys know we talk a lot about investing your money, and trading is intimidating for a lot of new traders, and there's going to be a learning curve inevitably. But what if you could have an advantage compared to the average person that's out there that's just trying to get in and out and don't really have a real strategy? Well, I'm here with two special guests, Mr. Mike Batts and Mr. Dennis, and they're going to share with us a tool and give you guys an opportunity to come learn more about it after this. So, gentlemen, welcome today. How you guys doing?
Doing
Oh,
great. Great to
fantastic,
be here.
fantastic.
Glad you can have
Thanks
us.
for having us. Thanks for having us, JT. Appreciate it. We're excited about the product, man. Really excited. Been working on it for a while, so a lot of excitement going on, a lot of buzz going on out here.
All right. Can one of y'all kind of tell me what is the product, who's it for, and kind of what does it do high level for people like me that got a country education, don't use no big words?
CFSM stands for Signal, Execute, Exit, C. And FSM is an acronym for the Fisher Signaling Methodology. So CFSM. And it came about because I had the same problem everybody else had. Trying to learn to trade. Michael been trading for 30, 40 years and was convincing me, working me for years to trade, and finally got up to see him in Chicago, and he showed me, his approach, his methodology. But it didn't work for me off the cuff. It was just too deep and too much information, and Michael's been doing this for a long time. He had, really refined what he did and what he does. And so I got the basics, but I started looking for another way to approach trading. So CFSM is let's call it the grandchild, what I developed when I first started trading with Michael. We talk about it being a tool, but really it's a combination. It's a methodology that has a very good tool associated with it. And that tool is the Fisher Transform. It's a signaling mechanic that's been around for a long time, 30, 40, 50 years. But mathematics, a mathematical set of equations that's similar to all the other technical studies. So the bottom line is that I found Fisher Transform to give me a better indicator of trend reversal. And when Michael created his book, he asked me if I would try to productize what we had done back 8, 9, 10 years ago. And so going through that productization, I realized that really a lot of people still have the same problem, the same trouble in trying to learn how to trade while they're trading. And it's difficult to learn how to trade while you're trading because that can cost you some money.
Yes, sir.
So what we tried to do is come up with a methodology that leveraged the signaling technology that came from the Fisher Transform and create a methodology of mentoring, coaching, and support for all traders, whether it's new traders coming in or whether it's experienced traders.
Okay. All right. Can we see what the tool looks like?
Yeah.
How complicated is it for the average Joe starting out? Is it for new traders or should it be for people that have a few trades underneath their belt?
So it turns out that there's 3 tiers to the tool. It's tier 0, which is for beginner traders, no experience, not exposed. Tier 1, which is for traders who probably traded for a while and maybe have some experience with live trading, but haven't developed a consistency yet. And then there's tier 2, which is what you're looking at right now. This includes all the features of the tool this tool is all about, which is grading signal. It also provides you mechanisms to deal with more signals because those signals sometimes aren't as strong as others, but they still result in tradable trends. It all started from this right here. This is a Fisher Transform. We've renamed this and given it some additional features, and we call it the Edge now because it gives you an edge in trading when you're looking at all the different components of what goes into a chart. So, but because this is, I won't say it's complicated, but it doesn't give you all the information you need. So what I did on top of this, I actually decided to make this a one-stop shop. And what you see here, there are specific components associated with this. From the Fisher Transform signals and those plot, we get what's called a signal to trade. I think what's key here in looking at the screen is that every signal that comes in is graded. So because what I realized as I was looking at this, even though I was using that secret sauce, that the edge, that every signal that I got wasn't a tradable signal. And so if you go back to, what I was showing you before, the edge, and I'm going to relate these two things because what you'll find out that right here, when you're looking at it, each one of these is a signal. Okay. So you're looking at the edge right now. Again, this is what Michael calls in his book, the secret sauce, because what it does, it confirms the structure of a trade. It confirms that the pricing is going up or down. And so the edge gives you information about signals to enter. And so at this point, what you see is an A signal right here, an A signal right here. Well, both of these can't be correct. It turns out that you get the signal, and we also have something called a trade-worthy advisory engine. And it said right here that you should just caution. This is an A signal based on the Fisher Transform signaling. And it gave you that and said, this is strong. This has good velocity. The pricing is going up and accelerating as it's going up. But there's some things that I see here that tells me that you need to enter this cautiously. So in Meta, you might enter this, if you enter this at the beginning, this would have been, if you're scalping, if you're trying to pull money quickly off of a trade, depending on what you're doing, then this may be something to enter and to have made some good money on. Mm-hmm. But if you're looking for longer trends, and many people who are day trading look for longer trends, then this would have been a caution entry, while this would have been a more accurate entry. This happened later, 5 minutes, these are 5-minute candles. And this signal coming from this saying you should enter this, and you should enter this as this trend in an upward motion, in a bullish motion. And that's really what happened here. When you look at this candle actually went up, came all the way back down to here. And then as the 5-minute period ended, it actually came back to right here. Before it started, it went over to this candle. So this indicator said, hey, I think this is a strong signal. You should consider getting into it. And I'm telling you, there's no caution you should have about getting into it. I believe this is going to last at least 3 candles before it might change direction.
Oh, so that signal is we think that you got at least 3 more candles if you get in here, and this would be a call because it's going up, even though that's a red
right.
candle. Yep.
That's right. I'm color deficient.
Okay.
So it turns out that the red candles in here indicate that it's a bear, that it's actually is what most people see as a red. All right. And then the one that's open right here is green. So the open candles in this, the way I have this laid out, is a green, the equivalent of a green candle. Most people have their chart set up. So red is down and green is up. And what you see here is these are open. They're green, but they're open. So right in the middle of this candle, the price reversed. If you were to look at this, you would have seen that the price reversed. And then as the new candle started, it continued on its upward trajectory. And the tool allows you to set up how you trade. That's the other thing about it. For this is set up now for a tier 2 trader. This is fairly, I won't say it's complicated, but it's fairly, you need some knowledge to use the system as it's set up in Configure right now. I'll show you what it looks like for a beginner trader, but this one is set up and it has features that allows you to be a scalper. Let's say where you're just trying to scrape some money off the top. It allows you to day trade where you're looking for longer trends of 4 or more bars in the same direction before you enter a trade. And it analyzes what's going on with the metrics behind the prices to give you that information from the beginning. It will grade that entry based on the way you trade. So we teach people how to set up the tool. In this case, I could have easily gone in and changed the setup for this tool. There's a lot of different information right here. But the bottom line is these are the different parameters that I can set up. All these parameters don't go to the traders. But if I wanted to say, something, I'm a beginner trader. I don't want to be able to see all those different things out there. I just want to be able to see when there's a real good thing happening. And I also don't want to be a scalper. I actually want to be a day trader. And there are all types of things like this that you can set if you are a beginner trader, or some of these things you'll be able to set as an advanced trader. So when I go back and apply these things, now I only see certain signals. Notice that the A's are still there because I told it to keep the A's. I also told it to continue to tell me when I should exit a trade if I'm in it. So this allows trader who is not very knowledgeable in all these different features and capabilities to enter a trade. Like this right here says enter A. This is an A signal. It came in the middle of a trend, and it tells them, hey, this is a good signal. You should enter it, and you should enter it with a good thought that it's going to last for a period of time. Now, right here in this A, it says right here, you got a caution because this is a pullback. Notice that the fast SMA continued down. A lot of times when beginner traders get into stuff like this and they see that pullback, they run. Because they said they're thinking this has reversed. But it hasn't reversed. All it did was pull back. And pullbacks are pretty typical when you're in trading because people have fundamentals they look at in the price and they make decisions. You know something? I've got, so many shares of this. I'm going to go ahead and sell those off, be able to make some money, but I'm going to keep the rest. And then everyone else is still selling off. And this is a bearish trend. So it's going from A down to this next A. And this was a whole trend. This whole trend was really 5 candles. It was 25 minutes with one pullback in the middle. And you were cautioned in the middle here saying, you might want to consider whether it's time for you to take that money out of there if you're not willing to continue with this trend, because it would know and tell you if there was a trend reversal by this. This is where a trend reversal occurred. Okay. So that's the fundamentals of how the system works. There are graded signals. They can be A plus, B plus, and there are some other, I call exotic signals that are specific scenarios that are set up for more advanced traders to be able to trade on based on how good and how well they know it. And we teach each one of those signals, what they mean, what the exit assist means. This is called an exit assist. It's yellow, means maybe you should consider getting out of this trade, depending on where your money is and when you got in the trade. A red exit means you need to be out of this trade. This was originally a bearish trade, a bearish trend, right? It told you right here, you need to consider getting out. And then right here, it said, you need to be out of this trade.
Yep.
So that's really how it works. It really works in giving simplicity without you having to do a lot of reading of signals. They're graded signals, so you know how strong that signal is. There's information that tells you, whether you should go ahead and get in this, even if it's a strong signal. Is it a strong trend? Is this a bullish trend? Is this a bearish trend? And it also gives you information about, something, the things that we looked at to tell you to get in, we now tell you those things are no longer there and you should consider getting out.
Okay. What does no B mean? If I see
no B mean, no B right here. That this basically gave an indication in the middle of a trend. This is a trend right here. That in the middle of a trend, it was a B grade assigned to this, but you should really be cautious here because there's a lot of tails and wicks associated with this particular set of trading. Meta is typically like this. So B means it got a B grade, but it doesn't recommend you enter this trade at this point because there's too much choppiness to this particular trend.
So there's a couple other levels, the zero, tier 0 and tier 1, where you won't see no Bs. You won't see any of that. What you will see is just A pluses and As. You won't see any of this. This is the most advanced tier that you're looking at. So if you take a look at what you and I've talked about in the past, and that's why I love this. That's why, you hear Dennis say and myself say that this is really the secret sauce to S&P, to the things that I've taught people. This, because, Dennis and I was doing this together way back when. But I just wanted you to take a look at something with these grades and how powerful they are. Say the only grade you get is an A. Say you're on that level where you only get an A or an A plus. So look at that A grade right there. That's to the right. After those red came down, and you'll see that right. So this is the A, and you see how Dennis had mentioned earlier, this section here that I love. You see how this section lines up perfectly with this grade. All right. This tells you to enter a trade. Right. And if you notice, you'll see that kind of looks like that V that you learned.
Yep. The counter before this. Yep.
Right. So this is what I'm saying, how perfect this CFSM lines up with the things you already know and so many other traders know, right? And this is the beauty of it. You don't have to do anything, man, but wait until this grade. Be patient. Wait for the grade, then enter with the knowledge that you have, the knowledge that CFSM, Dennis, and the team will teach, right? The coaching. Just wait for the grade. Wait for the grade.
So you don't get in on an A, you get in where it tells you to enter A. So we just wait for it to say enter A, and then you get in a call or a put based off of the SMAs.
I get in on the A plus and the A.
Okay, even if it doesn't say enter A.
Right. And because of how it aligns, right? Like right there, you see how it aligns with what Dennis says, the secret sauce, with that code in the middle. You see that up arrow, and you see that lines perfectly with the A. So you got to know a little bit about trading. And once you do, man, this really simplifies it. So it takes all the clarity. It takes all the guesswork out.
Let me show you what it looks like without the enter in there, because I had left a few things in there when I took it off before. Notice now you don't see any of that because I toggled all that off. Okay. Whether you should enter or I did the exit in there. There's actually it's called an exit assist to tell you when to exit. But I wanted to take it and make this as clean as possible. So when you are a beginning trader, you really, one of the problems is that there's a lot of confusing things on the screen. If you're doing, set it up to where everybody tells you to do RSI, MACD, Fibonacci, all the other things that you can set up on the screen to tell you when you should consider entering a trade or exiting a trade. So what I tried to do from the very beginning was to simplify that. One, you don't need to understand all those metrics and math to know when you should enter. I graded the trade. I tell you it's an A. There it is right there. You see the A, you should get in. Right. Now, I also know that how Michael S&P works because Michael taught me S&P from the very beginning. I noted right here, he gave you one example, but here's another example of what you see as a V forming right here. And if you say, well, I think this is a V, right? Right here, it has an angle down. And then his S&P methodology says, well, you should enter on the next candle after a V. If you recognize a V in a candle, whatever direction it is, this is an upside down V.
Right.
Well, there's the A right there.
Exactly. And that's why I love.
So it's telling you this is a trend that's going to be down, and this trend is down for 5 candles. And this is Meta. So just so everybody understands what we're looking at, you see a couple of candles, Meta sells for $650, $660. So in this case, you got Meta right here at 655.21. When you got that A, it was at 659, 659.98. So something like that, 659.98, and ended up at 655.26.
Right.
So we're talking about $4 difference between where it told this A occurred till they got to the bottom of the trend. Depending on how many contracts, this is an option situation, depending on how many contracts you have, and if you're at the delta, right around 50%, then that's $2 of movement, $4 total of stock price movement, $2 associated with a delta and an option movement. And depending on how many contracts you have, that's how much money. I think Michael sometimes typically uses $1.50, $2 on his limits. So he would, if he had gotten in right here, then it would have probably sold somewhere down in here.
Yeah.
At a $1.50 or $2 limit. And this is the great thing about this tool. It allows you to trade the way you want to trade. It gives you indications of what's going on with the pricing movement. It gives you indications of how long that pricing movement is going to occur. But it allows you to make decisions about what kind of trade entries you want to make, what kind of trade exits you're going to make. I use OCO exclusively, and I try to use OCO even to exit. Now, but there are times when I do what's called a hybrid OCO, and I will start out with an OCO to make sure it's not going to reverse on me. And then I'll switch over when I get about halfway through what I expect to make on a particular trade to a trail stop. And then I manage that trail stop through the amount of money I want to make. So one of the other things, and you and Michael would talk about it when I first came on here, for Tesla, and I heard you, and I remember trading this today. So I said, something, I think I got a grade. I think I entered at the beginning. Well, I did. I typically don't enter on a grade that happens pre-market, right?
Okay.
This is 5 minutes before the market's opening, and folks do all kinds of wild stuff right after the market opened. But guess what? This one was A+. I looked at it. I saw that all the other parameters were right. I saw that it had enough space in here for me to be able to make this money. This is 488.18. It went all the way up to 495.38 before it had a pullback. And then it pulled back to right here. And then you got this downward motion right here. So depending on how much money you were trying to make, you got the entry that says you should enter. Now, remember, I cut off it telling you to exit, right? I'm only showing you the grade. It gave you an A+ grade saying this next candle, and I had it in scalp mode at the time because I'm a scalper. And I'll be honest with you, I'm a sniper at times too. So I will snipe. I have a little different approach than Michael has. He trends more. He does more trend-oriented trading. I do more scalp and snipe-oriented trading. I will take the money off of this because what did we just say that was? That was 488. And to be honest, it went all the way up to here. It went all the way to 495. Before it came back
$7
to 492. So either way, you got anywhere from $4 to $7 in this one candle. Now, but they got different amounts of money in each one. And what people may not have thought about is that if I'm going the same distance as someone else, I'm going the same speed as someone else, then the size of the candle dictates how fast I was going. This thing came out the gates like it was at the Kentucky Derby. It just flew out the gate. That means that it was accelerating. I kind of think about the beginning of a trading session, almost like getting on the interstate highway. Now, so at the top of the ramp, you're at 0, just like here. But as you go down that ramp, you speed up to try to get to the same speed as the rest of the traffic. And then once you get into traffic, you are going at the speed of the traffic. That's what's happening with the pricing as it goes through that 5 minutes. Now, it doesn't stay there the whole time. Sometimes you might have to pass a car, so you accelerate. There are times during the course of the 5 minutes where the pricing is accelerating, but you also have this consistency. That's what the SMA is showing. The SMA is showing you the moving average over that period of time of what's going on. So what we do with CFSM, we evaluate how fast the prices are moving and which direction they're moving in using the Fisher transform down here. If you look right here, you can see right here in the middle of this, that this gap between here and here is much larger than, let's say, the gap over here or the gaps right here. And what we've done, we understand what those numbers are. We've translated those numbers to tell you information up here at the top so that you understand how fast these prices are moving, whether I should have gotten in. I got a grade A plus. Like Michael said, he see A plus, he's getting in. A plus means that the signal is a strong signal and that the momentum, the velocity of the pricing and the velocity acceleration of the pricing as high as it gets. And that's why you see right here, you have a candle that went all the way up to here before it pulled back. Also notice, just so that folks who look at it see it, notice that this body of this candle is not as high. That means that the pricing velocity had gone down. And the same thing here, and the same thing here. Now, this shows that mathematically, I understand what it is, and that's what we translate so people don't have to worry about it. But also notice right here that you got another signal right here. And you can't see it behind this little exit because it told if you were in a trade here and it was a bear trade, it's telling you need to get out of here, right? You need to get out of here because this thing's getting reversed. And guess what? It did reverse right here. It started going back up, and then over here the velocity increased, and you can see that this body is bigger than this. So what CFSM does is take that information I just gave you and make it so you don't have to know all that information. It takes that and puts that in a grade. It takes that and puts that in a threshold. It takes the information and says, hey, it's time for you to get out now because the things that told you you should have gotten in are now telling you you should get out if you're in a bearish trade. And if you hadn't been in that trade, and you were now thinking about maybe I should get in this trade, it now gives you a grade about whether you should get in this trade. In this case, it didn't give you a grade because there's not 3 candles in a row that's in this trend. There's only this piece of a candle, this entire candle, and then if you know how Michael is the candle expert and knowing every candle, all the Japanese candlestick patterns, this one right here went up to this height right here, then came all the way back down before it got here. There are not 3 candles in a row here. This should not have received a grade. It did not get a grade. What this does is give you the information you need to make it clear what's going on in the market when you're in the middle of trading so that you can make good decisions. It tells you when you should get in. And these are recommendations. When you see this exit right here, this is a recommendation to exit. This is your trade. You can decide when to exit. The bottom line for us is that was a decision made not to do algo trading, not to do automated trading or AI type trading, because most people still want to understand what they're trading and how it's being traded and making decisions about their trades. So we give them information to make better decisions about their trades, when to get in, how long to hold, when to get out, how to maximize their profits, how to minimize their losses. And when at the end of the day, as I try to tell folks when I teach them, 4 things should happen at the end of the day. You should either make a lot of money, you should either make a little money, you should only lose a little money, but you should never lose a lot of money.
All right. Awesome. Mr. Bass, I got a question for you. Then I'm going to throw it over to Mr. Dennis as well. Do you mind sharing with us your trading?
Oh, absolutely. I'd be glad to. So let's just start with what Dennis explained is the edge. I've been using the edge for 5 or 6 years. That's the part in the middle that you see. I've been using that for a while, and that's been great for me. But now what CFSM has done is really increase my confidence of what I'm seeing and how I'm trading. Because now, like I was pointing out to you earlier, when I look at the part in the middle, the edge, the Fisher signals, when I look at that, it lines up perfectly with the A plus. You can look at the A plus at the beginning of the morning. That's why I was telling you that I was thinking about just trying to get in, and I typically don't trade the first candle, but I'm thinking because I see this, right? I see, and that arrow you see at the middle is called a final up signal. I see a final up signal. Let me know it's going up, and it lines up perfectly with the A plus. So that's all I need, right? That's all I need.
That green arrow at the bottom. That's what we're talking about. Yep.
That's right, right. That's
Okay.
an up signal. And you can see it lines up perfectly with the A plus. And as I've taught you, both SMAs going up, right? So
Mhm.
when I see this, immediately I go, I need to get in. So what CFSM has done for me, man, is really giving me, now I had confidence already, but it's giving me a lot more confidence in what I'm seeing, what I'm thinking, what I should do. Okay.
Mhm.
Because now when I see that grade, you're not gonna see a lot of systems give you a grade. Now, and that's the highest grade, the A plus. So now when I see an A plus grade lines up with a final up signal, these SMAs are going up. I'm pretty much in the trade, and I feel real good about that. Feel real good about it. And same thing, that's a call. But I see the same thing, on a put, right? I'll see a red down arrow, right?
Mhm.
Then how about go just a little
Right
bit
here.
right there? Yeah, you see that? I'll see a red down arrow, right? Which is a final down signal, right? So I'll look at that, and then I start looking at the candle, that next candle, and I see it going down. So I'm very comfortable. I'm very comfortable with that, and this is what CFSM has done for me. It's given me a lot more because it provides clarity. It brought a lot of clarity in what I'm thinking and what I'm seeing. So it's helped me out tremendously with my trade.
If you were a newbie trader today, like why is B trades important, or should we just only like wait for the A plus, see if it's going up or down, get in on a call or put, and just ride it out until we see the red exit?
Stock market trading can be difficult, right? A tradable trend is when you can make $1 to $2 in 3, 4, or more candles. That's a tradable trend. I would say that the answer to your question is beginner traders should stay away from B trades because B trades require you to understand some different aspects of what's happening with some of the parameters that it uses to determine whether there are B trades. This information over here, and I didn't get into that, this
Mhm.
is called a trading dashboard. When it's red, it's telling you that the thresholds are not being met. When it's green, it's telling you that the thresholds are being met. Well, depending on those thresholds, will dictate whether you have a tradable trend. Well, it turns out a lot if you're in the middle of a trade, middle of a trend. I'm sorry, middle of a trend here, because this is the middle of a trend. Notice that you don't have any signals. This is a final up signal that gave you the A plus there.
Mhm.
But all the rest of these are now after the up signals or before the down signal.
Mhm.
But this is a tradable trend. This is Tesla. This is probably $2 to $3 from here to here. And so at 50% delta in an option, that's $1.50 of profit on a contract. So I start looking at this saying, why isn't this getting a grade? And what can I do that will help people who are more knowledgeable and can read this information, understand what acceleration is, understand what velocity is, understand what ATR is, and how volatile a particular stock is? How can I help them understand and make decisions about whether this is a trend that they want to trade? And that's where B plus, Bs, BXs, and B1s. You see all those on the screen right now. This is a
Mhm.
B plus. That means that all of the metrics were green. You see a BX here. That means it's showing signs otherwise of being able to be tradable for a period of time. But you need to protect yourself on this kind of stuff. Because notice here, this is a little bit choppy right here. This tail is longer than the body. So if you're not in the right situation and didn't get in the right timing, you could actually end up either stopping yourself out or you might get out not realizing that the next candle is going to go all the way down to here. And so advanced traders need that type of information and they need that type of flexibility. But beginner traders, what I tried to do with having tier 0, tier 1, and tier 2 is to say, as you grow, as you learn, then there are more things that you can do to trade. There's more trades available to you. So tier 0 is only A plus grade.
Mhm.
You're only going to see in any particular stock, you may see 4 to 5 of them a day. And A grade, tier 1, that's A plus and A grade. You're going to see more of those. A plus grades can end up being A grades because they were disqualified as A plus, but they really fit to be an A. So you'll see more A grades. It gives you more tradable trends that you can get into. It gives you more information to understand that. And the whole time you're learning what I'm seeing and how to have belief in the signals and what they're telling you. And then after you get past the A pluses and the A's, you notice over here, this would be a difficult trend here. I know you're looking at this. This is an excellent example. And this is today's chart from Tesla. This is exactly what happened. These are exactly how the grades work.
And do the grades show up during the candle, or does grades show up after you go to the next candle?
It shows up at the end of the candle.
Okay.
Great.
So it's telling you about how strong this candle was, and how strong the trend is. When that grade is placed there, it is at the end of the candle. It's telling you this candle graded out. You now are in a trend or have a signal that's very strong. The difference in the edge is that the edge, it can repaint. It actually goes on every tick. Every tick is evaluating all the parameters and all the pricing associated with that particular stock, and it will paint it at that particular time. Mm-hmm. But if it changes in the middle of a candle, it will take that painting away. But if you were to able to get a repaint right here, and you say, every time I see an initial down signal, I'm going to make an entry. Then there are going to be times when all of a sudden you enter and that initial down signal is gone. And what the question I asked myself was, well, how do I know this is a good signal then? And what I found out was that the information contained inside these lines tell you whether it's a good signal or not. And once I understood that, I said, well, when is it good and when is it not good? And once I understood that, then I could grade it. And if you notice right here, the reason I say this is a great example of a trend right here. This A right here indicates that this is an initial down signal and a bullish trend. And this is a validation of that. This is a final down signal and a bullish trend. It didn't get graded. There's no grade here. We have this so you can see it, because people who want to understand when they have a signal that wasn't graded, they can put that up there. But if you look right here and you believed in these signals and you said, hey, this is an A signal, I'm going to buy me a contract, and I'm not going to get out until it tells me to get out or until I get a reversal. Mm-hmm. You would have gotten in right here and you would have rode it all the way down here. You would have ignored this yellow one right here. You were in pretty decent shape. You probably made some decent money here, depending on what happened. Mm-hmm. But you don't have a reversal yet. You have exit telling you this doesn't look right, because what's about to happen right here is a pullback. You might want to consider it depending on what your trade is, but it's not a reversal. Remember, these are on reversals. This is a change in a trend from a bullish trend to a bearish trend. Okay. So now it's told you this is reversing. Mm-hmm. And it takes a while for a reversal to set up to have the velocity and pricing in that direction. That's what's happening right here. The bulls are still fighting the bears. The bears are still fighting the bulls. Mm-hmm. But overall in the pricing, it understands, no, I'm telling you right now, there are more people who are selling this and selling this price down than are buying it. So if you were to get in on an A and trust the signals that you're seeing, then you would have rode this all the way down to here until this reversal, which is a final up signal, or this one, which is an initial up signal on the next trend, which is three candles. Notice this is 3 candles. It got a grade. That's why it got the grade, because it said 3 candles in a row in the same direction.
Oh, okay. Not to cut you off, but I just wanted to make sure I understand. So I wouldn't have gotten out where it said exit. I would just look at the chart at the bottom, and until I see that arrow going up, I just ride it out.
No, it depends.
Just ignore the exit.
It depends on how you traded this. If you traded this and you were concerned, you didn't have an OCO set properly. Let's say you had an OCO that was set real low, because you can make your OCOs anywhere. I use OCO. I have different OCOs depending on the situation. Mm-hmm. You really want to pay attention to your exits based on what your entry was. If you got in on that A and you didn't have the right OCO and you start seeing profit dropping because now you've got a pullback right here, then it's telling you you're about to have a pullback because it's yellow, it's not red. Mm-hmm. Now, when you got right here, it actually was going in a pricing direction that's bullish. This exit is associated with that candle. It's telling you right here that if you got in this candle for some reason, and it won't cause I told you to get in there. And I don't know why you were in there, but you might have been in there. And if you were, you need to get out of here. Because what I told you 2 candles back is going to take effect now. Right? So remember that each candle is being evaluated individually unless it has a grade associated with it. The grade is telling you what it's observing over a period of time.
Okay.
So this exit is associated with this previous candle where it was going down, and this actually went down and then came back up. It told you to exit because something's getting ready to happen here. People are starting to buy up again. They're starting to go into a bullish trend. They went into the bullish trend, and then it had a down signal. This down signal did not get graded because it wasn't strong enough. So let's say you only got in on graded signals. You're an advanced trader. You only got in on advanced signals. You get in on A. I didn't see anything that told me I had a good OCO. I made sure that I took care of myself. And now I'm over here. If I got over here, now when you see this B is something that an advanced trader will look at and say, oh, yeah, we get ready to go now. Because having a B signal in the middle of a trend like this, and I think that Michael might even classify this one as a money shot. I actually included some of these things as part of what goes on, and I actually have an arrow that can be put there to show what is officially called a confluence, which is officially a money shot in here.
Yes.
And as long as you have this crossover happening as both fast and slow SMAs are down, you will get an arrow indicating, like right here, when it went up, right after the confluence, both slow and fast SMA in the same direction, the next candle, an arrow will show here to show you that this now, everything is going up. And this is a strong, that's why I got in here. You got A plus, you got confluence, both slow and fast SMA are up, and you have structure associated with the trade because you have the Fisher transforms also going up. When you have those 4 or 5 things going up, it's a matter of how much money you're going to make and making sure you don't get greedy and try to make too much money on a particular candle. Because when this B happened right here, this is telling you this is getting ready to go in the other direction. You should start thinking about getting out of this. It didn't tell you exit until you got here, but this told you to get out. So going back all the way back over here to what we were talking about before, this is one of those formal money shots where both SMAs aren't just going in the same direction down. They're going at a high velocity down. I think Michael usually describes this at 45-degree angle. When he sees a fast SMA at 45 degrees, he's trying to see if he can get in that because it just says that it's going to pull this slow SMA down, and this is going to go for an extended period of time here. And that's what happened. Depending on what goes on in your decision-making relating to how you got in right here, because we have some other parameters that you need to consider. Are the SMAs in that direction? If you have the edge, because the edge doesn't come with the standard package. It's an add-on because it does repaint. And some people don't want something that repaints. They want something that when it's there, it's telling me what I need to know. But folks like Michael and others, they can deal with repainting because they understand that pricing and signals can change. Yeah. But right here, once you got this, then you have to make a decision. Is everything in alignment? And I can tell you right here why this would have been a problem. And I'm just giving you a little extra information in trying to evaluate whether a signal should be entered. It gave you an A grade right here, but the fast SMA is still up and the slow SMA is still up. See, because those two are up, even though this is grading down, the letter grade is always at the top of the direction it's going in. I would be concerned about this because the pricing hasn't changed enough for both of these SMAs that are down. I got a grade. Should I enter this trade? And there's 5 things you should evaluate before you enter this trade. Is it graded? Are both SMAs up? Are both of the Fisher transforms up if you have Fisher transform? Do I have structure? And do I have velocity and acceleration and enough space to make the money I want? ATR tells me how volatile that stock is. And you see it's red right now. It's because Tesla, at this point, and by the way, it's still checking out Tesla, even after hours. So that's what you're seeing. This is live stuff. So it's looking at what's going on here after hours and evaluating this, and it keeps evaluating in case you're a 24-hour trader. So, but what it's doing is telling me that there is not enough. There's only $1.37 available to make on a trade if I got in it right now. Is that enough based on where it is? Just even looking right here, TPC. Now, I didn't want to get too crazy here. This is for advanced traders, but TPC is a trend persistence counter. 6 tells me that there's been 6 candles in that same direction. When you have that many candles in the same direction, it starts exhausting. The trend starts exhausting. People start wanting to get their money out of it. You see right here, this has been going down for quite a while right now. And so after a while, you should not enter. This is a B1. The reason that's a B1 is because it's telling you, you could think about entering it. You may make some good money for a couple of candles on it, but you should be trying to get greedy right here. Mm-hmm. And that's the kind of thing that we try to teach people when they're making decisions. And going back to this one that you were looking at, that when you see these things that are going, you get a grade. I'm trying to remember right here. You get a grade. Also look at some of the other features, because you're going to have another opportunity. What happens is sometimes we see the grade, just like sometimes we see the candle, and we decide, oh, I got to jump on this because I'm not sure I'm going to have another one in the next 10 minutes or 20 minutes. And what this tells you is before you enter, C is for signal. You got a signal. And once you start looking at E to understand exactly whether you should enter this, mm-hmm. then you start saying, I'm not sure at this point I should enter this because this hasn't started going down yet. And it wasn't until you got over here that you really started seeing fast SMA, slow SMA indicating down. And it's just a protection. Having A's, having grades, having an evaluation of every grade allows you to better manage whether you should enter a trade or not. This would have been a great trade for a Michael, it would have been a great trade for me. I would say for a beginner trader, even with an A grade right here, that's why now I took that off so you can't see it, but I got money, either it says no A or caution A right here. I took that off so we could clear up some of the screen because that's really an advanced feature. But it would tell you should avoid this because there's a lot of trouble right in here. Mm-hmm. But right here, good news. You got a great trend here to be able to trade on, and you can make some money on it.
Oh, yep. Awesome. So to anybody that is watching or listening to this and they want the software tool, they want to know how they can work with you, how they can get access to it, what information can you share with them so that way they can start using this on their next trading day?
CFSM.com, SEEFSM.com. C, signal. E, enter. E, exit. With the Fisher signaling methodology, CFSM.com. There they can learn more about the tool, how it works. They can learn about the tiers, tier 0, tier 1, tier 2. And we have plans next year to go a little further than that. I won't get into too much of the details, but for the ones who are, once you get to advanced trading, you'll love what we're doing in 3 and 4. Mm-hmm. But for tier 0, tier 1, and tier 2, they're currently available. And if you go to CFSM.com, you can get ebooks, you can get white papers to describe it for you. You can get a better understanding of how it works. And we're having webinars now as we go into our official, we're in soft launch right now for the product. In the beginning of the year, we'll be in hard launch, meaning it'll be generally available. Right now, we're taking people on our waiting list. We're going to understand whether you're a beginner trader or whether you're an intermediate trader, an advanced trader, so that we can make sure we advise you correctly on what goes on. But yeah, CFSM.com, SEEFSM.com, and you can go there to learn more about the products, more about the tiers, more about the additional information. And every one of our tiers comes with coaching. And if that's not enough, you can add coaching packages to your tiers. If you need, once you have gone through all the training, we have an onboarding program so that people understand the things I just told you. It's 8 modules. If you don't know about technical analysis, it takes you to learn that. If you don't know about SMAs and what happens with that? What's going on with the stock market? It gives you the options, how to deal with that. Those 8 modules cover that. And then there are another 4 modules that cover how do these grades work? How do you go through the C process? How does SEE map up to SMP? How do these things work as far as OCOs are concerned? We recommend OCOs initially. So there's training, onboarding, coaching. There's also a community associated with it. So that everyone who comes in and buys a tier 0 product, they're automatically put into a cohort where they're working together. And we're monitoring what they're doing, and they're able to ask us questions about what they're seeing. Of course, for us, this runs on the Thinkorswim platform. Thinkorswim has a great paper trading capability. Michael and I were talking about this last night or night before last. How long should someone paper trade before they start getting out here and putting their money on the line? There's a couple of ways to learn trading. I think one of Michael and I, both of us have a mentor who comes from the same place, James Speed, and he says, losing money in trading is your tuition to learn how to trade. Now, what we're trying to do is to go from the Duke University tuition to the community college tuition. We want you not to have to risk a whole lot of money to learn how to trade. If you learn to trust what's going on, and if you have good mentors, and Michael has been a great mentor to so many people, me and some of you, some of the other folks along the way, and some of them are doing very well in what he's taught them. But it's taken years for them to learn to avoid the risk of losing and to maximize the likelihood of having profitable trades. What we believe is that if you will take the time to paper trade using this system, if you will pay attention to the way and be disciplined about when you enter a trade, how you manage a trade, how you exit a trade, then you will minimize that tuition cost and you will maximize your profitability to a point where you can learn to be an effective trader faster. And then once you become an effective trader, as I said, either you make a lot, you make a little, you lose a lot, but you never lose a lot.
Absolutely. All right. And for everybody that's watching or listening to this, for your convenience, I'll put a link underneath this video so you can click there and go get on the waiting list. Or if it's already past waiting list time, you can go ahead and join whichever tier is for you and get a part of this community. So learning how to trade in the stock market is something that I'm intentional about. I have known people that have made literally millions of dollars trading in the stock market. We're not promising you that this software will make you millions, but we all know that the stock market has the power to change your life, financially speaking, and tools like this make it easier for you to learn how to start making money sooner, just like Mr. Dennis touched on. And while there's a learning curve with everything, this shortens your learning curve, so that way you can start making money quicker. All right. Any final thoughts from you, Mr. Bass, before we wrap it up?
No, other than JT, we appreciate this so much, and we hope that you've gotten something beneficial that can help you today, even without the code, can help your training tomorrow. Okay, even without having the code. So we appreciate everything you've done here. So thank you.
All right.
The same for me. I just appreciate the opportunity to be able to tell people about it. We developed this because we needed things that made it better for us to trade, and we found out very quickly this could help other people. And it is to bring trading to more people. This is an opportunity to be able to take advantage of, the greatest financial market in the world. And people are making money every day. But there's a lot of smart people who aren't. And it's because they're not disciplined and they don't have a plan and they don't have signals that they can count on. We try to provide that to everybody. Michael's given me great advice and help in trying to do that. And I appreciate the opportunity to be able to tell people about it. Hope we can help them be better traders.
Oh, yes, sir. And for those of y'all watching and listening, if you have questions about trading, about as it relates to using this tool, anything like that, put it down in the comment section below. I would love to have these gentlemen on again in the future, but go out And don't just watch a bunch of YouTube videos or listen to a bunch of podcast episodes. Actually go make money. There are tools available, this being one of them. And this is the one that I recommend that you go and try first or next if you've been trying different tools in the past to start getting consistent with your trades, to help you increase your confidence and to start putting real money in your bank account. So, hey, till next time, I'll see you guys in the next episode.